Nicole Petallides and Kevin Green are with me. We've got Arista Net earnings. We've got Cadence coming out as well. I mean, these aren't like as big of household names, Nicole, but their charts are just as big as everything out there.
Yeah, you know, it's interesting that you say that, because as I was looking through these, right, to familiarize myself for our earnings, to get ready for that, I was looking at the 1 year and I said, wow, what a great 1 year chart for ANET and for Arista Net. And then I expanded. I went to a 3-year chart and it was the same. It just basically went from $65 up to $292, right? And it's hovering around these new highs. And the same for Cadence. I did the 1 year chart and I said, wow, I wonder, you know, has it been volatile? I went back another, you know, to the 3 year, and that went from 118 to 315. So they really have served the shareholders well. I will say, as I was looking up for Arista Net, I felt like the guidance in the last quarter was looking pretty good and people felt a little more confident about this quarter. For the Cadence one, their guidance was a little bit shy, a little bit weak for this quarter. So let's see what they bring to the table today.
All right. Like that, keep zooming out, chart don't change. Usually a good thing when the direction is up and to the right. What do you think, KG? Should these be names that join the ranks of some of the big ones?
Yeah, definitely, especially when you're looking at Arista Nets, you know, they are a cloud service provider, so they might have seen a little bit of, you know, a tailwind when it comes to the overall AI trend and having some exposure when it comes to artificial intelligence. So I think that might be a telling sign, as well as some of the option flow going to Arista Net into today's session. Now, Cadence is going to be a little bit different, right? You're talking about, you know, software technology, looking at 3D designs and things of that nature. We have seen a little bit of softness when it comes to some of the commentary around other companies that have exposure to the space, but it has been able to fare pretty well when you're looking at the price appreciation. So I think we're going to get some key insights into some niche industries, to say the least here, but ANET probably has a little bit more of a bull case than Cadence going into this earnings announcement.
All right. Good thing about Cadence is they still use some of those systems to design chips and whatnot, but I hear you, it seems like Arista Net may be a little bit of lower hanging fruit. And there you go. There's your sell-off in Cadence. But this one's also quite volatile on earnings, by the way. It oftentimes has some pretty big moves on its report. So it's declining in the aftermarket here. Revenue, $324 million, that's net there for Cadence. Analysts were looking for $1.34 adjusted EPS and revenue just over $1 billion. And right now, it seems like the market is, the revenue is okay. The earnings were like they came in just ever so slightly, 138, a slight beat there. Outlook probably worth looking at here, as they guided for revenue of $990 million to $1 billion. And I think the street was looking for closer to like 1.1 to kind of cross that $1 billion threshold a little bit more clearly for the full year outlook, or the next quarter outlook rather, Nicole. So I think there's a little bit of a miss there on the guide.
Yeah, and you know, overall, I mean, the company, as I said, the expectations, there was some concern about this guidance for this quarter. And look, it came in a little bit weaker. And I will say the CEO is out talking about the strong finish to the year. I do like that they said they had growth across all of their businesses. In fact, they're very pleased with their record year-end backlog of $6 billion and more. So to build on some strength for this year. But the truth of the matter is, you know, something's missing here when you have a sell-off like this. So, you know, we'll have to just continue to comb through these numbers. I see for the adjusted numbers, it looks like it's a double beat. It may be part of this is once you mentioned the outlook, and that's probably definitely part of it.
Yeah. Is that the miss here, KG, or is there something else?
It looks like the guidance moving forward is the miss. I'm also looking at margins. I mean, margins actually did improve on a year-over-year basis, so I think that's a really good thing to see, to say the least here. But when you're trying to guide and you're missing the street's expectations, like we saw in the last quarter, they're going to take it out on the stock, and that's just what we're seeing. It's just a repricing overall. I haven't seen too much into the weeds when it comes to the different business segments or units, if you will. But I think just looking at that guidance alone could be the reason why we do see a sell-off here in the near term.
Okay. All right, yeah, the next quarter revenue probably leaves some to be desired here by bulls. 587 to 597 for the fiscal year EPS. If they hit the top end, they hit the estimate of 593, but it just kind of looks like across the board, outlook is indeed a bit soft there. So we do have, I think, kind of an outright miss for Cadence, especially when the top line didn't exceed expectations. Maybe Arista Net gives us something better here. It looks like a pretty decent beat to me on the top and bottom line. Top line maybe just a edge out / meet of expectations. 1.54 billion street looking for 1.53, but the earnings did beat the estimate. Shares are coming off there, Nicole.
Well, I'll tell you, I mean, the other one said beat, so I'd like to circle back on that. On this one, I see what you're saying, the 1.52, 1.56 billion, the estimate 1.53, so seems to be very much in line here.
Yeah, guidance does, yeah.
And decent numbers, right? I mean, that seems like that's fair. It certainly seems fair. When I think about this one, you know, having been a good story overall, cloud networking, you know, helps all these internet companies with what they need to do using these. They either have direct sales or they use channel partners. JMP actually recently raised their price target to $325 from $215. It's at $280. So they definitely saw some upside potential. And it's been hovering at these new highs. But so far, we have to continue to comb through the numbers because right now it looks like it's on pace for what it was what was expected.
Yeah, it's not a bad report at all. Just kind of seems that the analyst expectations were starting to pick up the last few weeks. I was reading some of the commentary coming into this, and there was a lot of discussion about the persistent AI momentum, no signs of tiring, you know, the hope that they would be able to guide a little bit deeper into 1.5 billion. Seems like maybe that just was already priced in here, Kevin.
Yeah, a little bit. I also think it might be the gross margin number two when they're guiding out. Maybe the street did want a little bit more when it came to that particular number. And I'm also trying to look for the backlog as well. This move does show that maybe they did miss somewhere when it came to the forward guidance. It's not the top and bottom line. So looking at margins, that might be a situation here. Also looking at their backlog. If we are seeing their backlog getting lower and lower, that could also mean that they're seeing a little bit of slowing. It could be a buy the rumor, sell the news type of an event as well. But I would just say the guidance for margin right now, when you're looking at the fourth quarter results, they had margin at 63.1%. And I'm trying to look at their guidance. I believe it was like 62% moving forward for the first quarter. So you are seeing a sequential decline when it comes to their guidance moving forward when it comes to margin. So I think that's also another reason why we're seeing a sell-off.
Okay. All right. So maybe not a perfect report here after all, despite a few beats and meets. Okay, and that's you were citing the gap gross margin into the 60%. I'm looking for the adjusted operating margin, which was supposed to come in around 42-ish, but I don't see that number quite yet.
42% is the guide moving forward.
Got it. Okay. All right.
I see it operating margin 41.5%.
Okay. Yeah. Then if they hit that next quarter, that's a bit of a miss. Street wanted a little bit more than that too. I mean, look, Nicole, it's like the bars. You know, what were we just saying about the charts? These are the companies that, you know, don't get that automatic bid, you know, like a Microsoft or a Meta does, or an NVIDIA or a more kind of household name. They kind of have to prove their worth a little bit more, and I feel like the market demanded something a little bit more aggressive here.
And look, when I look at both of these names, I mean, you know, for cloud networking, Arista Networks, I feel like we talk about that a little more. For circuits and circuit boards, it's just not something I feel like we talk about a lot. So, you know, is Cadence the big leader, and should they be doing better? Or, I mean, you know, do they have a moat? And so you start to wonder why aren't they, you know, knocking this out of the park in this, you know, last quarter when they gave that projection, it was a little weaker than expected, and now this quarter, again, you know, showing that weakness. And basically all these earnings, I know you're talking about Lattice Semi in the next segment, but that's down too. All these earnings have down arrows on a record day.
A little trouble in paradise.
Well, at least for the Dow, yeah. So, I mean, you know, what's going on here?
Yeah. I mean, look, I think there is a little bit of truth to the notion that the further you move away from chips, the less it's obvious what kind of disruptive role AI is playing. You know, it's like the chips, all of their outlooks are basically like shifting into high gear forward. It seems like when we move from hardware to software, there's a little bit of a jump here. Maybe the market got a little ahead of itself on. Kevin, I'll give you last thought.
Yeah, I agree with you. I mean, you're not going to see the realization of AI within some of these software names in the next, 6 months or even 12 months. It's going to take some time, and obviously they are ramping up their capex spend in order to be able to facilitate some of these products. And market really doesn't want to see you spending money without showing some type of top line growth. So I'm right there with you. Outside of maybe Microsoft and Google, those are the only two right now, and maybe Adobe, that are actually showing AI, top line growth when it comes to AI solutions in the software space at this point.
All right. Nice conversation. Good sleuthing, guys. Thank you very much. Good teamwork, Kevin Green and Nicole Petallides.